Okay, hello, good morning, good afternoon. Welcome everybody. Welcome to this session on NRR, Net Revenue Retention. Excited to have you here joining us. Very, very interesting and important discussion for pretty much anyone who's in the account management space or the customer success space. So we have a lot to cover today. It's going to be super fun, and I'm glad you are with us here today. Let's just very quickly introduce ourselves. My name is Alex Raymond. I'm the founder of Amplify. I am the host of the Account Management Secret podcast and the author of the soon to be released book, The Growth Department, coming soon to a bookstore near you, or more accurately, coming soon to Amazon. And I'm joined by Jennifer Pinto. Jen, you want to introduce yourself?
Hi everyone, Jennifer here, and really excited to be helping Alex with our NRR discussion today.
Yeah, it's a big deal. It's a big important topic. We have a lot of stuff to share. Just before we get into it, I mentioned that I host the Account Management Secrets podcast. Many of you on this call have probably listened to it before. Send me a wave or a hello in the chat if you have. It comes out every Friday, and we're really unpacking the art and science of what it means to be a great account manager. So having a ton of fun doing that. Check Spotify or Apple Podcasts every Friday. And we're going to say more about Amplify in the coming minutes. But for now, I just want you to be aware this is the growth community for account management leaders and customer success leaders. So tons of great stuff happening within Amplify. We're going to share more about how that can help you, your team, and your career as we get toward the conclusion of today's webinar. So let's jump into the fun stuff. What's going on today in the marketplace? What's going on in the world today that could affect our lives and our careers as account managers and as customer success managers? What's the reality look like? And you've seen this, you live this every day. You know that win rates are down, deal sizes are shrinking, time to close new business is getting longer than ever. So for the start, we should all spare a thought for our friends in sales and marketing. Our dear friends in sales and marketing are trying really hard to put numbers on the board for us, and that's just harder than it's ever been. And we see this because we know that they're missing quota. So a lot of account executives are missing quota. And on pretty much every single metric out there, the reality is a lot tougher than we would like it to be. A lot of people are saying this is basically the worst statistics in about a decade or so, and paints a pretty grim picture for the new business part of the world. And what this does wind up doing then is putting more and more pressure on us to deliver. Jen, anything you want to add on this?
Yeah, I think it's a good call out that these changes and these significant hoops that our speed bumps that we're experiencing is actually really raising the importance of strategic account management and customer success. And so this is really a time for this role to shine and really step into what it means to own your book of business and own revenue as a strategic account manager. So I think it's actually a really good thing as long as we're thinking about it in this new way instead of the old tactical kind of CS strategy.
Yeah, I agree. And I think focusing on this word durable that we had down there at the bottom of the page, like durable growth is what people are wanting, meaning they want to be predictable, they want to be compounding, they want to feel confident about what's coming. And our job in the post-sales world is to present that confidence, right? Is to do the work to make sure that we are building a strong, durable foundation for our business. So I want to just start off here, open up the chat window here within Zoom, warm up your fingers a little bit, and tell us on a scale of 1 to 10, how durable is your revenue right now? Like, are you feeling like, yes, I've got everything totally dialed in and it's predictable and I'm always within 3% of my forecast and everything's going great? That would be a 10, for example. Or are we just at this like total scattershot, I don't know what's going on out there right now sort of area, which would be a 1. So just quickly open up the chat here in Zoom, pop in a number somewhere between 1 and 10. And if you want to add some color commentary, like why you're scoring yourself a 3, for example, then go ahead and do so. Part of this is we all know it's tough out there, right? And we all know that there's the stakes are pretty high for us. We all know that it's a very uncertain time. And the more that we can share whatever's going on here, then we can talk about it and figure out how we are going to make any improvement. So score yourself on 1 to 10. Tell us how you're doing, how you feel about how durable the revenue that you have today is. Like, how's 2025 closing out is another way to put this on a scale of 1 to 10. Yeah.
Yeah, I see a couple numbers coming in, and they're only to host and panelists, so I don't think everyone's seeing them. I don't know if it's because people are shy or if they if they didn't know, but I'm seeing a 7 and a 3. Who else? Yeah, I see.
There we go. All right, we got people claiming 7s. People claiming 7s. Excellent, outstanding. So what I want you to do now is put on your CEO's glasses. See the world through their eyes. How would your CEO be scoring the revenue reality? How durable would your CEO be saying this is? Would they give it the same score? Higher? Lower? Why? What's going on there? Have you had a chance to talk to them about it? Okay, so we've seen big difference between what I think in some cases and what my CEO is probably experiencing. Wouldn't surprise me. Jen, I don't know if it would surprise you. It wouldn't surprise me to see the CEO score be a little bit lower.
No, I think it depends on personality too, because some people have a little more pessimistic outlook on customer health, and so it probably just depends on your temperament a little bit.
Here's what CEOs want, and you're probably right if you're scoring your CEO's perception of durability lower than your own. So the CEO, what are they caring about right now? Right now, as we close out 2025, they want to know, they want to feel confidence. That's what this first point is. Durable revenue means confidence. How confident are we, and can they therefore be in the revenue that we have created, right? If we have a revolving door where customers are coming and going at a very accelerated rate, that's a problem. If we have a leaky bucket, that's a problem. So they want to know that the revenue that we're spending all this time and energy, right? We just said that sales and marketing is less efficient than it's been in a decade. So we're spending tons and tons of time and energy and money getting new customers in the door. The CEO wants to know that this is durable. They also want to know that we are accelerating our payback period, right? You know that customers are not profitable until they hit the payback period. So the CEO is sitting there thinking, how can we shrink that? How can we make that even smaller? How can we make that a faster payback for us? And they want compounding growth. Compounding growth, what does that mean? It means that when we have new wins, new customers coming in, that revenue is accretive to the base that we already have. So we have a strong, solid base that we are building on. That's what we mean when we talk about compounding growth. And this is absolutely critical, top of mind for all CEOs out there right now. Durable growth, quick payback periods, and they want to find the compounding. So don't be surprised in your post-sales leadership roles if you're feeling more pressure, if you feel like more is on your shoulders, if you feel like more is going on out there. Jen, what do you want to add to this?
I want to add that this is we're seeing this a lot in job descriptions for VP and director roles, that companies are looking for leaders who can deliver on the above and have a proven track record. And it's becoming more and more consistent in the language and the way they talk about these roles.
So that's the stuff that is not listed on this slide, but so we're saying the quiet part out loud. Your CEO wants a leader who can do this stuff, right? So they are looking at you and your team to deliver these things to make their life easier. And we know that this is important. We know that this is important because we understand the economics of payback. We understand the economics of profitability within our business. You've probably seen slides and data similar to this, things that show that for every $1 in revenue, it costs me $1.18 to bring in a new customer, whereas it costs me only 28 cents to expand a client, so super profitable, or only 13 cents to renew a single dollar. So the economics are very clear. And if you don't have this kind of clarity within your company, of what a new logo dollar is costing you versus existing versus an expansion, you want to go figure that out. You want to find that so that you can make your value very clear to people, right? Because in an age where people are talking about profitability and everyone wants to extend their runway and we all want to compound our growth, the more that you can tap into this and be really fluent in the language of business around these elements, the better off you are going to be. So you've probably seen stuff like this before, but it always bears repeating. Existing customers are way, way, way more profitable. In fact, infinitely more profitable than new customers. And we want to get that top of mind for everyone. And you want to find the data that makes sense for you. I'm curious, does anyone on the call here know what their payback period is? Do they know what their cost of customer acquisition is? Does anyone have this kind of data top of mind? I want to see if you're in line with the benchmarks that I've got here or not. Does anybody have this? Jennifer, you've seen data like this. What does this reflect your reality, or are we off in any direction? Does it look familiar to you?
Yes, it looks familiar to me, and I am curious how that's changing with AI tools and the cost of credits and things. So, yeah, that does look accurate.
Looks accurate. Great. Well, here, let me ask you another question then. Since the topic of this webinar is net revenue retention. Net revenue retention is the compounding engine of the company, right? So NRR, just to define this in case anyone doesn't know what it is, net revenue retention is our existing book of business minus any churn that we suffer plus expansions divided by the initial amount. So that's how we get to the percentage. Now, if you get this right, and this is why this is important, this is what I want everyone to pay attention to this. And actually, I would like you to all grab your pen and paper and write down the number that we're about to fill in here, because there's a number at which your revenue doubles every 4 years if you can hit a certain level of NRR. So what I mean by that is there's a number. Once you hit that number or more, you don't need to acquire a single customer and your revenue is going to double every 4 years, assuming that you keep that ratio, assuming that you keep that NRR percentage up there. So this is kind of illustrating for everyone the power of compounding, the power of durable revenue. So put what you think the answer is in the chat. Jennifer knows, I know what the answer is. I want to see if anyone on the call knows. At what percentage of NRR does your revenue double every 4 years? What's your guess?
You know, everyone's in their chat GPT right now asking it.
I know, everyone just got out their calculator and they're like, oh, what's the number? Yeah. Ask ChatGPT. Screenshot this and put it in your AI tool and see if it comes up with the right answer. So let's see what the guesses are that people have here. All right. Well, you know the answer, Jennifer. You tell us.
Okay, it's 119%.
Yes, 119. So ask yourself, what's your NRR today? If you're at 119, then you are able to create a compounding revenue engine that doubles in value every 4 years without adding a single new customer. If you're above that, then even better. That means you're doubling faster than every 4 years. I know people at 120. I know people at 130. If you are below that, if you're at 105, if you're at 110, then great. You've got something that's working, but it's going to take you longer and your compounding is going to be slower. If you are below 100, you have an all hands on deck type of situation. You need to go fix that. So first of all, we need to figure out what is your number today. That's probably the first order of business is let's figure this out today. Where am I? Secondly, how can I pull levers? What levers can I pull in order to get there? Best in class software companies out there today are at or above 120. There's a whole bunch of public companies that are out there that are above 120. There's a bunch of scaling companies that are 120 or 130 or more. And we're going to show some data here in a second on what the baseline is versus what this kind of goalpost is. So let's talk about that. First, I want to share a little bit on why this matters. Okay, so let's try to tie this back to why this matters to your CEO, why this matters to your investors, to your board, to your leadership team. It matters because when you look at the value of your company, the enterprise value, the value of the stock options that you have, just the value of your organization, if you can get 120 NRR, you then receive a 63% valuation premium from the markets. So why is that? Because the market rewards predictable, durable compounding growth. Awesome. That's why you want to get there. You want to have 120 as your goal. You want to have 120 as your goal. You do that, it shows that the acquisition engine is working, retention is working, expansion is working, customers are getting value from what we're doing, we have a more predictable business, all that stuff. That is what accounts for a very big gap in value over time. So what's going to motivate your CEO to give you more resources? What's going to motivate your CFO to give you more money for enablement and training and growing the team? Watching the company grow, watching the value of the company increase. So don't think of NRR as simply some random data point that's important only to you in account management and customer success. Think of it much broader, like zoom out and look at the bigger picture, which is because we have a more durable company, we get rewarded with a higher valuation. So 63% is the valuation premium according to Software Equity Group. That's a big deal. That's a big difference. Everybody wants to be moving in that direction, and that's how you're going to get your CEO's attention when you start talking in their language. And there's some data here. We've got data from EBSTA, which is now Fullcast. I got acquired by Fullcast. We have data on why expansion is so powerful for us. So we talked already about the fact that new business, hard, slow, inefficient these days, like it just feels like pushing a rock up a hill. Therefore, the more that we can get from our existing customers, the better. And it turns out it's easier, faster, and cheaper for us to do so as well. So if we look at things like win rates, well, guess what? They're going to be 3 times higher with an existing customer. Sales cycles are basically cut in half when we're selling to an existing customer versus a new customer. The number of people that we have to talk to and meet is way smaller as well. Why? Because they already know us. So we know that that's already happening. And this is helping us to build our compounding revenue engine. There's data that in 2024, 52% of new revenue came from existing customers. So what does that actually mean? So I know I just said those words and everyone probably just kind of nodded along, but let's talk about what this actually means. This actually means that when you look at all the net new revenue that your company brought in 2024, which was partly new sales and partly your work in account management, customer success, over half of it came from existing customers. That means that you delivered more revenue than the entire sales team. So try that on for size. And then ask yourself, does your CEO know that? Does your CFO know that? Does your boss know that? Is that part of how you think about your role? Is that part of what you put into your strategy as a leader? So super important for us to understand the power of the economics here and the current state that we're in so that we can have a better vocabulary. We can start to figure out how to keep doing the things that are working here. So here's the benchmark that John's referring to in the chat. Jen, when I look at this, I see a lot of companies, talked to a lot of companies that are like 105, 110 NRR, something like that, and they feel pretty good. I always want to encourage them to set their sights higher and get to 120 or more.
Yeah, I mean, there's a lot of room for improvement. And when you're looking at the numbers, we were talking about this the other day when we were putting this together. It's like the difference looks small, but it's actually quite significant when you're talking about $1 million portfolio, right? That's going from 105 to 107%. Like that's meaningful impact that you're delivering as a CS or account management leader that is impacting revenue and the financial stability of the organization. And knowing that fact and knowing how you're moving the needle, being able to track it and speak to that story is really powerful as a leader.
Well, so think about it. Like it sounds small to say, well, I went from 105 to 109%. Okay, whatever. Like that doesn't sound like a very big number. But if you have $100 million portfolio, that's a $4 million difference. So that's material. That matters. But the second thing to reinforce is that this compounds over time, right? So that's the whole point of NRR, is it repeats every year. And there's a huge difference over time between the two of these. So yeah, I mean, I agree. We want to have more focus on those numbers there. What else?
What do you do when you have a company that doesn't track this, Alex?
I mean, if you're not tracking this, you got to get with it. And for a couple of reasons. First is, I know that all these account managers have this idea of like, I don't get the resources I deserve, and nobody understands what I do around here all day. Well, this is a big part of it. And claiming the value is important. Showing the value is super important. So if you don't have this data, go ask your finance team. Go run the report yourself. Go say, what was my book of business on January 1st of this year? What's my book of business now? And do the calculation. Do that for your entire team. Figure out what direction you're moving in. You may not get the actual totally precise NRR number, but you'll get a general idea of, are we moving in the right direction? And so I think having that transparency and accountability is actually really helpful for all of us here. The other thing I want to encourage everyone to do, and this is gonna set your strategy for 2026, right, for the coming year, is I want you to rethink the concept of portfolio. Everybody says, say, what's your portfolio? They say, oh, I have a portfolio of 20 customers or 6 customers or whatever it is. And we always count numbers as our portfolio. I want you to change how you think about this and approach your portfolio like a financial asset manager, right? Like an asset manager would say, they wouldn't say, I have a portfolio of 17 stocks. They would say, I have a portfolio of, $1.5 million or $2 million or $3 million. And here's the mindset shift that I want you to be thinking about here. Is, can we get away from talking about this in the nuts and bolts of how many customers are in there and say, I am the steward of an asset, right? The asset is in the form of a portfolio of revenue from customers. And my job as an account manager is to grow that value, right? See the value increase over time. So great. A lot of people will nod along and they're like, yeah, okay, I get that. I'm with you. So my job is to increase this over time. When we dig into the portfolio and look at the individual elements, what do we see? Well, we see some customers are going to churn, some customers are going to be flat, and some customers are going to grow with us, right? I think everyone is still following along there. Here's what happens with that. When you look at your portfolio, you're going to say, inevitably, some customers are going to churn every year. They're going to leave. They're going to leave for whatever reason. They're going to leave because their strategy changed. They ran out of money. They got acquired. They went bust. They don't like your product anymore. They didn't like your people. They changed personnel. There's like a million reasons why someone might leave, but some are going to leave. Well, guess what? If you have 10% of your customers leaving, which means gross retention of 90%, that means that over 5 years, you've lost 40% of your portfolio. Right? That's a big problem. That means your portfolio went from 100 to 60 over the course of those 5 years with 90% retention. And you may say, but 90% retention sounds good. It sounds good, but compounded over time, it's not a very good result. You're also going to have a bunch of customers that are just flat, right? You know these people. We're going to do the same thing we did next year as this year. So we're just going to continue steady state. Well, that's fine. But if you're not raising the price to cover the cost of inflation, you're actually reducing the value of that book of business over time as well, right? It's decaying because of inflation. So you're going to have a bunch that are flat. You're going to have a bunch that are leaving. So where do we spend our time and energy? What do we focus on? Let's focus on the ones that are going to grow. If you can find customers that are growing at 30% a year, those will almost triple in 5 years. And so how do you figure that out? How do you do the segmentation? Segmentation is one of these really important conversations. Very few companies are doing this right. Very few companies are doing this well, but you have to understand how segmentation fits in here so that you can be doing this stuff right. So I want you to just kind of change how you think about this stuff and say, how am I taking whatever my asset base is, whatever my book of business is, and growing it? And a lot of, Jen, I'd love to hear what you have to say about this, but I see a lot of account managers get all wrapped around the axle about the 1 or 2 customers that are going to churn every year. And they spend tons and tons of time and energy working on that. And guess what? They might miss a huge expansion opportunity because they're trying to save an account, especially if they're trying to save a smaller account. So I see a lot of people, or I wish a lot of people would think differently about their portfolio and how they're approaching things. What resonates with you here?
Yeah, Alex, I have talked to a lot of teams where when we ask about segmentation of the portfolio, a lot of times it comes down to, the contract dollar amount, or like the logo, right? And those could be important factors, but there's so much more to consider, such as their willingness to participate in a partnership, right? Like some customers are not interested in growing and expanding with you, and it's up to us as account managers to really understand the client. Are they in a place to grow? How much white space is available, right? Do they only have a small portion of what we offer? Is there room to actually expand within the organization? So all of those factors are really critical, and like you said, not wasting time on a client that's not a right fit or is going to churn anyway, when you have a lot of expansion potential hiding.
And well, we've seen some of this inside of the Amplified community and some of the stories that we share in there, right? So we have stories from our friend Joanna Hagelberger, for example, who has two incredible stories. One of them is growing a customer by 25x, so from $200,000 in revenue to $5 million in revenue, right? So just think for a moment what that does to your book of business. What does that do to the resources that you're able to get? What does that do to the recognition you're able to give your team? Like, think of the value that you're providing if you're able to grow a customer by 25 times. And then, of course, she has that other story of taking a single customer from $50,000 to $10 million a year, which is a 200 times increase. And guess what? She could only do that if she's focusing on the top line on this chart here. Like if she's running around worried about these little accounts that might be turning this, that, and the other, and she's missing the bigger picture of where is the opportunity to expand, then you have a completely different outcome. And so if there's one thing I want you all to take away from this slide, it's focus on that top line. That orange line there at the top is going to be where your opportunity lies. Like this is where you can really crack stuff open.
Oh, I was just gonna say, yeah. I mean, you need to invest your energy in the accounts that can be winners, right?
Totally. Focus on the winners. So, question for the group. Actually, I just put a question in the chat. Go over to the chat. How confident are you that you know which customers of yours have 20 to 30% expansion? What's your level of confidence in this? Who's thinking about their portfolio in the way that I was just talking about? Like, is this something that we're down with? If we said, go find 20, like if I twisted your arm and said, you have to go find 30% growth in your portfolio next year, would you know where to turn? Right? If we said you have to double your portfolio next year, would you know what to go do? Those are big questions, right? Those are meaningful questions. So how confident are you? I want to see what people are saying here. Open up the chat window, pop in a number. Tell me why you are or aren't confident in this. For a lot of people, this is a new way of thinking, right? So they say, "Oh, I don't like the scrutiny of thinking about this in revenue terms. It makes me feel very exposed. It makes me feel like I'm not able to be of good service to my customers if I have money in my head at the same time and stuff like that," which I would say is not the case. Right? Your customer wants value. You're going to get paid for the value. That's how we link all these things together. So what's your level of confidence? Can you find that growth? Let's see what people have to say. I'm getting some answers in the private chat saying very few. All right. So maybe this is something we want to work on there for Jennifer.
Yeah, Alex, I'm thinking about this in the context of some past accounts I had, and it's like, knowing that there's a possibility of expansion due to whatever factor, knowing it and making it happen in a set amount of time is a completely different animal. So like, I know, like I could look at my portfolio that I used to manage and know which ones are capable of expanding, which ones are not. being able to do it in the next year and feel confident in that's tough.
Different story. Yeah, different story. Well, look, what does this mean? This means that there's a huge opportunity for you out there. There's an opportunity in how you show up, in the value you're providing, in the work that you're doing, and in how you're talking about this internally. And so I don't want you to look at all this and think, oh, this is hard. This is a big challenge for me, kind of thing. No, think about this as this is your opportunity to shine and to do great work. We know that your CEO wants durable compounding revenue. We know that there's a lot of scrutiny and visibility on net revenue retention and gross revenue retention. And we also know that if you can step up and deliver or step up and start changing the conversation inside your company about this, then that's going to give you a lot of legs. It's going to give you a lot of leverage. It's going to give you a lot of authority internally if you can do that. And most of this just starts with how you're thinking about it and how you're talking about it. And that's the real invitation here, I think. What else, Jen?
No, I think this is really our time to get out there and start thinking about this in a different way. The market is demanding that we do more growth through our current accounts, and if you're in a position that you don't feel super confident in those skills, like this is something that we have to work on. And I'm seeing more leaders asking for that. And even that comment I shared with you the other day about combining CS and sales into a growth department. Companies are moving that way. We're starting to see more and more of this focus on expansion revenue. So I think the time is now.
Yeah, well, the time is now. And the other thing, just to get more of your perspective on is, you spent a lot of time. You get all these people asking for connections to new job opportunities, and you see all these new job postings. Like this, we didn't just make this up here. This comes from our lived experience.
100%. I mean, I can't tell you how many times this conversation has come up in the last month.
Yeah, so this is the time, and here's the conversation that happens behind the scenes. The conversation behind the scenes typically happens like, your CEO gets back from a conference and says, everybody there was talking about NRR. I want you to go fix it. Go fix our NRR problem. Okay, sure, fine, great. The question is, where do we start? How do we do this? Which of the many levers do I start to pull? How do I know if I'm moving in the right direction? How do I know if I'm doing the right things? These are all very natural questions to have. And that's part of the discussion that we wanted to have today in this webinar is, if you are given this request of solving NRR, fixing it, improving it, growing it, what do you do? And I want to offer some ideas on how you can start thinking about this and framing how you might approach it, because it's a big deal. Rushing headlong into this without training or support or deep knowledge is probably not going to get you the results that you're looking for. Doing this without the alignment of the rest of the company is also not going to work, right? So the first thing we all need to do is say NRR is a company-wide problem. It's a company-wide goal. It's a company-wide North Star. This is a thing that all of us need to be focusing on. You might be the person appointed to come up with a strategy and to do the work and to sort of figure this out, but it's something that's going to have very big, very wide ripple effect across the whole organization. And it can be easy to get this request and just kind of feel like a deer in the headlights. Like, what do I do now? And I now want to show you, here's some ideas on how to think about this, especially coming into 2026, where guess what? I'm afraid to tell you, I'm sorry to tell you that pressure's only going to get worse in 2026, right? This is only going in one direction. It's just going to be more on your shoulders and higher stakes for you, therefore higher opportunity for you. So that's what we're going to get into here in a second. I'm just curious, as we get into closing out the webinar here in about 5 minutes or so, You've gotten this request before. You've been asked to improve net revenue retention. What was easy? What was hard? What worked? What didn't? What did you change in your behaviors? How did you start to tackle this challenge? I'd love to hear any thoughts that the group has. What are some common things that you've seen here, Jen?
I think figuring out where the gaps are in the customer journey. A lot of renewal decisions are made well before renewal time. We know that, right? And so if you're having a problem with net revenue retention, looking at where are the failure points in our customer journey can be really helpful. If you're not even tracking it or not sure, you just know you have a lot of churn. I would start with finding your benchmark, then looking at where the churn's happening, and doing kind of a diagnosis on that process to see if you can kind of identify some trend at some point in that journey or some type of customer behavior that's like telling. The hardest part about improving NRR for your team right now, oof.
I like this. I like the suggestion about segmentation and using that well. I like the suggestion about overcoming hairy churn. Right, like when customers leave, it whacks your NRR. Accountability is also one of the things that's pretty tough out there as well. So those are definitely challenges that we're seeing. Yeah, thanks for the comments there, guys.
And Alex, sometimes I feel like I hear this, oh, well, they were bad fit customers. If you find yourself saying that, then get with your sales team. You guys got to stop signing bad fit customers, right? So I do hear that one a lot.
Yeah. So how do we take the first step here? So how do we take the first step? I want to offer you a system for growing net revenue retention. I want to offer you an idea that says, you know what, there is a way to do this. We can incorporate a lot of great practices in here. We can create a roadmap and a guide for ourselves. The method that I use, method that I want to talk about here, is called the Amplify method. And it's based on 4 distinct pillars. And if you do these, you're going to be matching the very same process that I referred to earlier when I talked about someone who had grown a single account by 25x and another account by 200x. You're going to be following the same process as she did. You're going to be following the same process a lot of people have to really make a big impact for their company and for their customers. And it's doing things like solving bigger problems, which means going out there and finding the next thing to do for your customer and breaking out of the box that they're trying to put you in. It means being relentlessly curious and just asking, keep asking questions until you figure out what's really going on with your customer and seeing the world through their eyes. It means taking accountability for the results and acting like an owner. So like basically, how would you think and act differently if you were an equity owner in your customer's business? What would you do differently? How would you behave? What kind of advice would you give them? And raising the floor means being really strict about how you protect your time and energy. Are you wasting your time on internal meetings, CRM updates, running reports, all these quick favors that turn into half-day things? Or are you just relentlessly focused on keeping your customers, growing your customers, and making sure there's no surprises along the way? And, I offer this because there is a path for you, right? I don't want you to think, boy, this is like some great big overwhelming problem out there. I want you to see there is a way. I've got a proposed solution, right? We have something that we think is going to work. It's a cadence. It's like a operating model, operating system, if you will, for how you run your team to focus on the very, very important thing of getting your NRR number up. And so that's the method. And what Jennifer and I are doing is in the Amplify community, Jennifer and I are running a program starting in January specifically on that, specifically on how to grow your NRR, how to boost your NRR, how to get the results that you want, how to get the recognition that you want out there, how to get into that mindset of growth and be a person who can very clearly link back what your work to very significant results that the customer is having. So we're doing this within the Amplify community. I'm super excited about it. It's the first time that we've ever done anything like this. We've done In the past, we've done our programs a little bit differently. This one is the NRR Growth Mastermind. It's a full half-day intensive, like drop-in session to give you everything you need to get set up so that within all of Q1, so basically between January and the end of Q1, you're going to have an incredible plan to get out there and start kicking some serious ass when it comes to your goal. So I'm excited about it. Jen, this is the first time that we're doing one of these. What are you excited about here?
I'm most excited about the fact that it's going to be cohort hands-on learning. So you're going to get to apply what we're doing to your book of business as we're going through this process. It's not lecture format where you sit in front of the computer on a Zoom call for 2 hours and try to learn something, go back and implement it. We're actually going to work with everybody in breakout sessions. It's going to be very interactive. You're going to be able to actually sit and apply this in your work with your cohort. And we're doing application process to make sure that everybody in the cohort should be there and is going to be a value add for you. So you're going to be working with peers that are top quality.
One of the biggest issues that happens when people think training, right? So some people are looking at the slide and they're like, oh, this is just another training program. The issue with training, you all know this, you've experienced this, is you forget 90% of it within a day, right? Just boom, gone, as though you were never even there. And this is specifically designed to help us with that. So we not only have the deep dive, but then you've got the benefit of the Amplify community over time. Right? So you do the deep dive, you do the intensive, you connect with your peers, you meet other people, you're solving similar challenges, you're building relationships. And guess what? For an entire year, you get to hang out with them, keep working on this, keep improving, keep getting better. So that's what I really super, super like about the model. So take out your phones if you'd like. Take a scan the QR code that's right there. That's going to take you to the page on the Amplify website that has all the information about that. That's amplifyam.com/NRR. See if you're a fit. See if you like what the offer is here. This is going to have almost infinite ROI for most of our participants, right? Because they're going to be spending about $1,500 to become a member. But as soon as you win, a single customer, boom, it pays for itself 10 times. You start to grow your customers. It's paying for itself 100 times or more very, very quickly. So take a look at that. We're going to follow up with this from this webinar with more information, including a recording to this session so that you can check that out as well. And feel free to ping us with any questions. Jen, anything you want to add as we wrap up here?
No, this was great. Thank you. And I know we had a lot of questions and comments in the chat. So thank you all and looking forward to seeing you in our mastermind.
Awesome. Thanks so much for being here, everybody. We'll see you again soon. Thank you.